Ben, welcome to the income flip, my friend. How are you today?
Ooh, caught me in a yawn. I'm doing great. I'm doing great.
We gotta
I'm
wake
doing
you
great.
up,
Good to
man. We
see
gotta wake you
you. Yeah,
up.
yeah, yeah. That's right. That's right. Let's go.
Hey, well, you're out of Orange County, and I was just saying my little sister lives in Orange County, and it's like such a beautiful area. Are you originally from there, or are you a transplant?
No, I grew up in the LA area, the Valley, Agora Hills, Westlake. Went to school in San Diego, and then ended up almost in between in Orange County, and I've been here for almost.
Got it. Got it. Okay, well, as is customary on the income flip, what I love to do is unpack the journey of the entrepreneur in front of me to figure out how you're building your cash machine and your wealth machine. I believe we're always building cash machines and wealth machines, right? Your cash machine is what helps you make money, pay your bills, right? All that stuff. And then your wealth machine is either the business you're turning into a wealth machine to get some kind of multiple on, or assets along the way as well. And I want to unpack and understand that story, right, Ben? So, how did you get into this business in the first place?
Yeah, that's a great question. You hear about and so many kids in college and growing up, they don't know what they want to do. Um, I would say that I guess I'm lucky in the sense that I always kind of knew what I wanted to do from a young age, and it was influenced definitely from my dad. He's always in owner operator, multifamily, a
Mhm.
foreclosure business, lending business, and so I just had a passion for investments just in general and real estate. And I went to school, of course. Graduated San Diego State for those Aztecs out there. Finance, real estate, and frankly, at that time, I just thought I didn't know what I thought. I thought that all I knew very little, of course. And anyway, long story short, I was introduced to a family friend, and I ended up in real estate finance, but in this unique niche world within the financial services industry. So I'm securities licensed. I am a financial advisor, if you will,
Mhm.
but not your stock and bond and mutual fund annuity insurance guy. All I do is real estate. And I've been doing this for 20 years in this little niche business within the financial services world.
So was it a family friend that introduced you to that? Like, how did you fall into that niche? Just
Yeah.
curious.
Yeah. Out of school, frankly, I was like, oh, who wants me? I thought people were just going to be lining up at the door to take me, right? That's how my mind was. And that was a really difficult time for me, Chris. For 3 or 4 months, I was unemployed. I was rejected and turned down, many times. And yes, my parents introduced me, plugged me into a family friend who brought me into this universe, and I wanted to go. Uh, I wanted to be on the acquisition side. I'm an analyst at heart, and I even got rejected there. But they're like, oh, we'll try this guy at sales. I don't even know why they put me in sales. Maybe it was probably because of a family friend.
Well,
They're
they
like, oh, we
probably
got to
said,
hire this
"Hey,
guy somewhere.
100% commission. Like, we're just gonna like sink or swim, baby. We don't." Yeah.
Pretty much. And so yeah, that's how it began.
Okay. So for to help us understand a little bit, right? You're in the specialty niche within real estate. What are the core services or products that you help people with?
So I'm just going to stick to primarily the core. Maybe I'll share peripheral throughout our conversation, but I am an expert in like 1031 exchanges, right? And helping baby boomers and seniors primarily do 1031 exchanges, right? Into passive income producing real estate. So you think about today, like aging of the population, baby boomers and seniors control the majority. My parents, your parents control the majority of the wealth in the country today. And a lot of that wealth, excuse me, here I am. I even slept more than I usually do last night. The majority of that or a good portion of that wealth is in private real estate that they've worked their tails off for 20, 30, 40, 50 years to accumulate, and they've also been managing. And they're in a situation today where they are tired of management. They do not want to receive one more phone call from the tenant. They don't want to deal with the triple T's: tenants, toilets, trash, or even fourth, termites, whatever it may be. And then these same folks, as you said, as we were discussing, Rob, on the front of this call, they're keeping tenants in the properties because they don't want to deal with anything. They're not maximizing their real estate by any means, right? Mm-hmm. So not only are they these, broadly speaking, demographic groups, they're tired of active management. They don't want to pay taxes. They're not maximizing the real estate. So what do? Right? You can do a traditional 1031 exchange and sell your property and buy another property directly. But that doesn't solve their problem, of course, right? Because if I sell this, I'm going to buy this, I'm still going to have to manage it.
Yeah. Yeah. And the devil you know is better than the devil you don't know. You don't know what that other asset is going to be like. Yeah.
Right? Bingo. They don't want to do it. And so what I do and my team does, we solve that solution. So we provide turnkey 1031 exchange solutions or properties that are institutional quality in nature. It's not you're selling a duplex and buying another little duplex. You may sell your duplex and be a part owner in a $150 million brand new Amazon distribution facility.
Yeah.
Right?
Yeah.
And where everything is managed for you. There's the consistent monthly income that's distributed. You get your quarterly reports on the terms of how the property is doing. You get your end of year tax return or tax report, 2-page document that you hand to your CPA. So what we do is very unique in the sense that we solve so many people's problems today. And the business, and I'll finish with this, that we operate in is such a niche business. It's growing for sure, but it's niche. And so it's very gratifying for me, having been in this space for so long.
Yeah.
Being able to help people not only solve their problems through great investments, and equally important, keep them safe from investing in the wrong.
Yeah, the wrong asset. Interesting, right? So that's, for those listening, right? That's a DST, Delaware Statutory Trust. You're moving people from a 1031 into one of those vehicles, right? You probably go and research the vehicles or research the people that have put the project together. I would imagine over 20 years, you have your go-tos, people that you know. You probably know which asset classes are better depending on different times, right? You're advising, like all of that. You're advising them on all of that. An area when I started learning about this years ago, I realized it solves also the problem for the landlord who owns lots of properties and has lots of kids, right?
Yeah.
Because now you're not going to like, okay, Bobby, you're going to get this part of the portfolio, and Susie, you're going to get that part of the portfolio. And then Susie's like, well, why is he getting all the good stuff and I'm getting all the bad stuff, right? And this way you can actually, dad could sell all of it and put it into a DST, and it kind of eliminates that headache, that problem, just from a
estate planning.
Yeah, estate planning purpose. Exactly.
And just for the audience, like it's exactly what you said, Rob. Like you could go into, let's just, for example, somebody puts $500,000 or whatever, 250,000 into one DST. Upon your passing, each of your, if you have 3 kids, each that 250 that you put in there, it's immediately separated. So when the real estate's, not only will the kids get their own individual income stream while the property is still being held within the DST, but once it's sold, the proceeds from sale go to each of the beneficiaries, if you will. So estate planning is another huge benefit in what we do.
Ben, what's the tax implication for those that are listening right now? So, Daddy Warbucks passes away, Bobby gets his share, Susie gets her share, right? Like upon distribution, upon the end of the DST, what are they paying taxes on that?
Yeah, I mean, so upon passing, you get the beneficiaries get a stepped up in basis, right? That's the beautiful thing about 1031 exchanges, the power of a 1031 exchange, and why so many so many wealthy people and investors are in investment property today. Is that you can you may have started with a $200,000 property 50 years ago, and then you 5 years later you sold that 200,000 for 500,000. You did an exchange, you deferred taxes. Then 5 years later you sell the 500,000 for 3 million. You defer all the taxes, assuming you do a 1031 exchange. And you keep swap. They call it swap till you drop, right? You swap and exchange, you defer and defer, and when you die, the beneficiaries inherit those assets at a stepped up cost basis at today's prices, I should say. And so, the beneficiaries will receive the assets at a stepped up basis once the property's sold. Now, I don't mean to get complicated here, Rob, but let's just say you're in a DST, and one of the limitations or downsides for some is that DSTs are they're not liquid. So if you were to pass, or even if you weren't to pass, you can't get out of a DST, period. It's got to sell. And there's a big sponsor, I mean, big companies. It could be Ares or Starwood or Cantor Fitzgerald or Invesco that are managing these assets. But if you were to pass today, Rob, all right, assuming this is you, your kids would get a stepped up basis based on today's values and the past, I know you're a young guy, but the past 20, 30 years, whatever, of taxes are wiped out. But if that DST sells in 2 years from the day you pass, and it has appreciated, then your beneficiaries would be liable for paying tax on the
On the
additional
gain of that.
appreciation upon
Yeah, but
passing.
it's still so amazingly
Huge. Yeah.
that's huge. It's awesome, right? I would imagine then upon death, then some type of valuation needs to occur to say, okay, this is what the asset value is worth right now, so that you can calculate what if there is growth from that moment forward, that's what you're going to be paying taxes on.
100%.
Incredibly helpful. That's awesome. Yeah, that is such a niche thing to fall into 20 years ago. Man. Because even today, I talk to people and they're like, they've just never heard of a DST, right?
No,
They might have heard of a 1031, but they've never heard of a DST, or they don't know where to go to have somebody help them, like you, Ben, do that. But before we get into that, I want to double click on something. You were in the business for a good 10, 15 years, and then you decided to go off and do this on your own, right? Start your own business. I want to unpack that a little bit, because now that really starts going to the story of the business owner, the entrepreneur. What was that like for you, right?
I'm so happy. I mean, teed me up. Let's see. For yeah, so I've been in the business for 20 years. 15 years I spent on I call it the sponsor side, or the syndication side of the business, where of course, I started in the basement, right, out of college. But I worked my way up.
They gave you a stapler and that was it.
100%. I mean, not even that. And so, but on that side, over that 15-year period, I mean, I was acquiring the real estate and doing the underwriting and due diligence, and then literally structuring these syndicated investment vehicles, whether it be a Delaware Statutory Trust, DST, or a tenant in common, or a private REIT, real estate investment trust, or a business development company, funds, you name it. And I had a lot of fun on that side of the business, but ultimately I got tired of the corporate BS, frankly, and uh, the politics, the corp, everything. It's just a mess. And and then also at the same time, while I'm crisscrossing the country, meeting and training and teaching financial advisors like myself today, right? Whether they're wealth managers, financial advisors, CPAs, attorneys, that's what I was doing. And I'd walk out of, I would say 90%, maybe even 95% of financial advisor, wealth manager offices. And I think, who in their right mind would give this person their money on the real estate side? Like, they have no idea what real estate, they have no idea how to understand real estate. They definitely have no idea how this syndication business works. What are they thinking? The client, why are you going with this guy? And then I'll turn the corner in a second. But so, having said that, I mean, unfortunately, in the world that we live in, greed and whatnot, a lot of the folks in my business will put anything in front of you or the client that they think the client will bite on, right? It could be easy. It could be, well, the easiest ones, high income, big returns, blah, 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 blah. And they don't care about the client, period. They want to close a transaction, and that's very unfortunate. So that was disheartening for me. The other side of the business, the advisors or wealth managers, their hearts may be in the right place, but they are professionals at stocks and bonds and mutual funds and annuities and insurance. They don't know the first thing about real estate, let alone syndications. So, having been burnt out on the sponsor side, I said, "Hey, how can I help people? Like, what can I do?" And so I jumped the fence and I became an advisor. And an advisor to help these baby boomers and seniors that work their butts off all their life to accumulate the wealth that they have. I do not want them getting, set up with the wrong people. And that's what led me to create Perch Wealth. And there's some symbolism behind Perch Wealth. I can go into that later. I won't take too much time, but that's what drives me to do what I do today. I want to help people, and I don't have a crystal ball. There's risk in everything. I haven't done 100%, wins across the board, but I want to help people stay away from the bad folks, be with the right folks, and help them live their retirements. They spend more time with their family and make more money, and so on and so forth.
Ben, I read somewhere that you partnered up with somebody on this journey as you decided to kind of venture. Do you still have a business partner
I do.
in this? Yep.
I do. My business partner, I met him along the way. It's a funny story too. When I was on the other side of the fence that I am today, I got a call from my business partner today, Ehud Gersten, and I went and met him. He was an attorney, practicing attorney. And I walked out of that meeting and I called my wife after. I said, if I was ever to jump the fence, it would be with this guy. He's morally and ethically above board. He doesn't know what he's doing in terms of real estate, but and he's well connected and blah, blah, blah. And so that's how it started. And so years later, we stayed in touch. Years later, we came together, and that's my business partner. So it's been a good run. We're definitely different and comparable, right? Which is what you want to find in a partnership. But that's how it started. And today, and I tend to ramble on. Forgive me, Rob. We have 10 advisors under the Perch Wealth umbrella, if you will, all throughout the country. So we do business nationally.
So you're the chief information officer, right? Is that correct? Like you're the
investment officer. If
you're
I
the
had to give
investment,
it a
yeah,
title, chief
yeah.
investment officer.
Yeah, so you're the chief investor. So you're analyzing the assets. You understand how real estate works, right? Like, so that seems to be, you're probably more analytical. Like, can I say that, right? Is that right? More analytical in nature. He might be more on the business
Structural side.
Yeah, side.
Business structurals. He keeps me in check, right? He keeps me safe.
Yeah.
from a but yeah, I'm the investment guy. I know this business. Exactly right.
Okay, I love it. I love it. Right, it takes a good partnership in order to do that. So you have 10 advisors throughout the country. Something I learned maybe 2 or 3 years ago from a gentleman locally in our area that does a lot of 1031s, right? Um, and I don't know how big the industry is, so whether or not you know Bill Horan, right? If that name rings a bell to you at all, right? He runs a business called 1031.net. Like nice guy, like super nice guy. He shared something with me that I thought I was shocked. He said just for 1031s, not for what you do, not the placing into investments, but he's like to do a 1031, you don't need to be licensed. You could do a 1031
For
anywhere.
sure. Of course.
I was like
Yes.
that seemed crazy. I was like, okay. It seemed I guess it's just because you're just an escrow. You're holding these properties, but it seemed weird to me that there was no licensing for a 1031.
No, well, so thank you for bringing that up because we can go so many different ways. Look, a 10 IRS code 1031 exchange has been around for over 100 years, right? So it's in the code, it's in the tax code. It allows investment property owners to sell their property and defer paying taxes on their profits as long as they exchange into other investment like kind investment property. And like kind is a very loose definition, right? It's
Mm.
investment or business investment property for investment property. So you could sell land and go into a hotel. You could sell a hotel and go into multifamily, so on and so forth. To your point, Rob, I would say um, 90% of all, maybe 95% of all exchanges are done through a traditional exchange, which is you, Rob. If you sell one of your properties, you're going to go buy another property on your own. You find that property, and maybe with the help of a broker or a realtor to do so. And that's still the case today. What I'm talking about, yes, I'm securities licensed and I operate in Delaware Statutory Trust, but like I'm the outlier. I'm a niche, right? It's still
Hmm.
widely unknown, as I think you said on the front end. So you don't need to be licensed to do a 1031 exchange. If you own investment property and if you want to sell it and defer taxes, of course, you can do that on your own.
Hmm.
Does that make
Interesting.
sense, Rob? Did I answer your?
Yeah, yeah, for sure. And Ben, this is you said you could exchange land for, obviously like you could do a 1031 into a duplex or a building, but can you actually sell a piece of property and move it into a business? Like that would that count, or it's got to be a piece of real estate?
Yeah, it's like kind.
Okay.
So
Like
real estate
yeah.
for real estate. Yeah.
Okay. Real estate for
That
real
would be a
estate.
beautiful thing. You know, we could
Yeah,
pray for that. I hope that the IRS loosens up. I don't think so, but
that would be
it's got
cool.
to be direct real estate for real estate. For example, like, and I'm sure you know the story, but like, you can't sell your primary residence. You can't do a 1031 exchange, right? It's got to be held. Any property that you own for investment purposes can be exchanged into other investment property. And there's also, look, the IRS has blessed us all with this opportunity to defer taxes, right? Going back to swap till you drop. But they don't necessarily make it easy. And we haven't gone down that path, and I'll let you guide me there if you want to. So there are guidelines and limitations and timelines that need to be satisfied to complete a 1031 exchange, right? So it's not easy. Um,
Yeah,
but
there's guidelines, and I think people listening to this, like I would always just encourage you go do your research on 1031 to know what the guidelines are, the restrictions. Get with somebody like Ben who can guide you through those, right through that. I'm more curious to go a little bit higher up and ask you some questions about patterns that you've seen. Okay, after being in the business for 20 years and talking to lots of investors, a lot of baby boomers that are like moving money and doing this, you've probably seen some patterns of people that do it well and have amassed a fortune, and other patterns of people that have done it poorly. And I'm just curious what observations you've made so that those listening right now could be like, okay, here's how you can win doing this. And this is how people lose doing this, right? Do the winning strategy, avoid the losing strategy. How would you answer that question?
It's a loaded question, my friend. And I'm just trying to think of, so from my side, um, and I don't want, this isn't to promote what I do. So just broadly speaking, like what I,
No, you can promote what you do. I mean, it's the same. I mean, I would look at something like if I look at sellers, right, as an example, sellers who choose weak agents make less money.
okay,
Sellers who
good.
choose
Okay.
great agents make more money. Just bottom line,
You
right?
keep me pointed there. There you go. Okay.
Yeah.
And for your audience, I'm not trying to promote myself. All I can, I will not promote myself, but if what we provide and what we offer, broadly speaking, me, my competitors, it sounds like a dream to so many people, right? Again, because there's so many baby boomer seniors and even younger that don't want to manage and aren't maximizing their real estate and don't want to pay taxes. Um, but it comes down to it's critical that you're working with the right advisor. And I'm not going to promote myself. The right advisor that understands the business and the players that are in this space.
Yeah. So
That is arguably the
I would
one.
imagine, Ben, correct me if I'm wrong, right? After being in the business, it's not about promoting you or not promoting you, right? It's about just speaking truth to like how business works, right? After being in the business for 20 years, you probably know who the good players are, you know who the bad players are, you know where the where the good investments are. Also, you know which investments typically lead to just, like uh, people astray. And so those are patterns, right, that you've developed of just being able to see that. And I think any good advisor sees that and says, okay, well, these companies normally run, like they have great DST products because they're great operators. They've been in the business a long time. They got a great track record. And so instead of somebody like me having to do a crap load of research to figure that out and hours and hours and hours and hours and hours and hours, you could just be like, these three, these
Right.
two, right?
That's
Yeah,
exactly that's
yeah.
exactly right. It's all comes down to and yeah, in any business, right? I mean, it's not just in any business. You
In
want to
any
work
business.
with the guy that hopefully you work with a guy that's honest, that cares, and that knows what he's doing. And even then, there's no guarantees, but you know that you're in good hands, right? Good or bad, you're in good hands. They're going to take care of you, and that's what we do. I assume that's what you do, Rob. That's all we can do is do the best that we can.
Well, the name of this podcast is The Income Flip, right? And the reason why we named it The Income Flip is because I realized years ago that what everybody's kind of working on is what I call highly leveraged income, right? Like everybody's like AKA passive income, but there's no such thing as passive. You have to do some work for it at some point, right? You earn that money, but you want highly leveraged income so that your money, your assets work harder than you do. And so this is why I actually wanted to bring you on the podcast because I think people don't utilize DSTs, as part of their strategy. That like this message has to get out there a little bit more. Many don't know what a 1031 is, and we have to sit down. We kind of have to explain to them what a 1031 is, what the timelines look like, and the way in the beginning when I learned about a DST, I was like, oh, it's like an insurance policy almost, right? This is how I looked at it. If I couldn't find, because of the short time frames that happen with a 1031, if I couldn't find a replacement property in that time, I could always have, a
Back up.
DST in my back pocket so that I wouldn't get hit with the taxes. Do you see people thinking of DSTs that way?
100%. And there's so many paths we could go down, Rob. In the interest of time, we can only do so much. But you're absolutely right. And just to give the audience, maybe they are familiar with some DSTs, but Delaware Statutory Trust. If you, I just want to give you through 30 seconds on the structure. DSTs, Delaware Statutory Trusts, were created in the 80s. They weren't set up or structured for 1031 purposes at that time.
Hmm.
But it's a structure or an entity, a trust, whereby you have one trustee managing up to 400, managing one property, and up to 499 investors can own that property.
Hmm.
In 2004, the IRS came out and said this fractional type of ownership is real property ownership and therefore eligible to satisfy exchanges. And I'll tie this back into what you were saying. So what you have is you have these sponsors, which I've mentioned. They go out, big real estate companies, if you will. They go out and they'll buy a $50 million self-storage portfolio, a $100 million medical office campus, $200 million multifamily, wherever. But they buy it, they own it, and then and so Rob, to your point, like you may want to buy your own direct real estate property, right? That may be your intention. But if you can't find one and you have this limited amount of time and you definitely don't want to pay taxes, the DSTs are already acquired, owned, stabilized, income producing, and you can identify them and exchange into them quickly, right? So that's
Hmm.
that. And then also, I just want to throw this out because you mentioned debt. The debt, some DSTs have no leverage. Some DSTs have some leverage.
Hmm.
Some DSTs have high leverage. So, like, if you're out there in a situation where you've sold your property or about to sell your property, and you need to, per the 1031 exchange guidelines, if you sell your property for 5 million bucks, you need to buy real estate for of at least you need to find replacement property for at least 5 million bucks, and maybe the $5 million property you sold, maybe it has 2 million of debt, right? So you sell your property, you pay off your mortgage, 2 million bucks remaining, you got 3 million bucks that you need to go take and buy $5 million worth of real estate to defer your taxes. Well, unless you have cash sitting in the bank, 2 million, you're going to have to go to a bank and get a loan to buy a $5 million property. In the DSTs, some DST or many of the DSTs have leverage already in place. So you can avoid going to the bank, getting,
Hmm.
vetted and pre-approved and blah, blah, blah. You can invest in a DST and pick up that debt. Or last thing I'll say is, let's just say you sold your property for 5 million bucks, you got 3 million of equity. You could splice off, I'm making this up, $300,000 of that equity and put it into a DST that's highly leveraged. And that 300,000 you put in the DST that's highly leveraged could get you the $2 million that you need to satisfy.
Hmm.
And then you could take the remaining 2.7 million and buy a property debt free, right? So you could avoid the
Oh,
bank altogether. There,
wow.
there's a lot of
Ben, that's interesting.
flexibility, and the debt that on the DS is non-recourse. So the sponsors that buy these properties, and if they have debt on the property, they're liable for the debt, right? Rob, if you're in a property today and you have debt on it, you're liable for that debt, right? You could sell the property, do what I just said previously, take that debt burden and the liability of the debt off your shoulders and do what you want to do.
Yeah, that was the thing I always found interesting about DST, right? I mean, 1031, I was like, well, I have to buy uh equivalent value or more and like equivalent debt or more, right? And I was like, I'm not solving my problem there, right? I'd love to be able to somehow buy something where that would not have any debt, and you just kind of explained a way that that could be possible if the DST is highly levered. I could take that 300,000, buy into that DST, and then take the remaining money and buy it with all
Bingo.
cash. And now I've got this and I've satisfied that. Wow, see, this is why this is important to have these conversations. I just learned something. Just add a lot of value to my life, Ben. Thank you for that.
Yeah,
Right.
yeah. There's
That
so
that
many different things we could do. I mean, it's just crazy. But yeah, I'm happy. I wanted to bring that up for that reason. I'm happy that
yeah, that resonates with me, right? Um, okay, there was something I was going to ask you about that. Um, okay, well, it'll probably come to me. There was something I was going to
yeah.
ask you about that, but I'll table it till later.
Yeah.
Okay, so Ben, you started Perch 5 years ago, right?
Yep.
Right. And when you started, because there's a lot of people that are starting a business right now, we'll kind of start wrapping this up a little bit. They're starting their business. They've decided that they take the plunge. Maybe they had these skills and they're going to do this in real estate. And I suspect, as most business owners, it probably wasn't as easy as you thought it was going to be, right? So, right. So let's talk about that and talk about reality and how you were able to kind of like push through to the other side. What advice would you give these newer people that are thinking about doing something full time in real
Love it.
estate?
I love it. First of all, I would just say, trust in God, frankly. I was making a lot of money on the other side. When I left, I was burnt out, as I stated, and I was just disgusted, frankly, with how this industry worked. And when I left, it was right when COVID hit. I just had my second kid. My parents just got divorced.
Oh,
I mean, I was in bad shape. But
mm,
I thought, I'm still going to kill it. I know everybody in this business, everybody tied to this business. I'm going to kill it. And I'll tell you, 4 months in, I hadn't closed a single deal. And
yeah,
I was in the doldrums. And thank God for my wife, kept me positive. But uh, after that, things steps just started rolling. And I got connected to this person, that person. So the question is, you trust in God, and um, the biggest thing I regret, frankly, Rob, is not doing it sooner. Right, I went out at arguably the worst possible time. Right, I mean, now real estate did well during COVID. Who would have known that? Right, I
yeah,
was
yeah,
you just I wish I would have gone out earlier on my own.
yeah.
And so for your audience that's thinking about it, whatever their industry is, like if you got that spark in you and you want to do it, just do it. Like you just have to do it. And that's what I tell my kids, that's what I tell everybody, just do it. And that's a regret that I have today.
Yeah, just do it, and you're gonna figure it out. You just got to keep moving forward. You just don't stop swimming. Just keep at it. One thing I learned in this whole thing, and people don't talk about this enough, right? I left uh, a very good business that I owned before. We'd gone through the dot-com boom, the dot-com bust, but then we rebuilt that practice, right, back up, and I was making really good money. And then I just had this like, this isn't where I want to be. Kind of, I don't feel good about this. Like, I like what I do, but I don't love what I do, and I want to love what I do. So I just turned to my wife with no system, no model, no mentor. I was like, I think we're going to be full-time real estate investors, which I had no concept or idea what that actually meant, right? This was before YouTube and like all that stuff, like that, before it was hardcore, right? And it took me 4 years, Ben, to make equivalent dollars compared to what I had made in my previous business, right? So I was like, we're all running two businesses at the same time. There's this household business, and then
Yes.
there's the actual business you have, right? And your
Yeah.
household business eats. It has like a monthly expense number that it has to hit, right? And I just remember being like, oh, our business made money, but not enough money to cover the household business, right? Right. And so it took like 3.5, 4 years, but I saw positive momentum. I saw us going in the right direction. And then once I understood what we're doing, it was like rocket fuel right after that. But there was a lot of I didn't have the skill set that you had. Like I didn't have like this specialty, this is what I'm doing. I was figuring my way in the world of real estate investing. And as you know, Ben, real estate investing is a big word, right? There's so many
Yes.
ways to do
Yes.
this, right? So you can get distracted with wholesaling, flipping, note buying,
Yes.
hard money lending, storage, right? And if you're trying to be the master of all of them, you're the master of none, right? You got to get good at one thing. And actually, full disclosure, it wasn't until I added the agent business to my business that my income skyrocketed because I was like, oh, I get this business. This is fee, like I get paid a fee for a service very similar to my recruiting business, right?
Yep.
It's the
Yep.
same business. And so I just happened to be then servicing lots of investors and I had this investment knowledge. So we spoke the same language, right? And they were my avatar. So then I
Yeah.
was just
Yeah.
able to kind of service them. And I'm like, oh, I get this. I can make my cash machine here, but I'm always thinking, how do I build my wealth machine? The wealth machine is building the business, buying more assets, all that stuff, right? And
Right.
so,
Yeah.
so what do you do actually on that matter? Then we'll kind of close the loop.
Yeah.
What are you doing for your wealth machine? Obviously, you're building Perch, which is part of that, right? But are you also investing in real estate as well, or do you also,
Yeah. Yeah.
what have you
So,
done there?
I'll tell you, yeah, out of school, I thought I was gonna, I envisioned I'd own tons of rentals. And, I'm in California again for the audience.
Oh yeah,
And
yeah,
I
they're
did
really
own a
cheap there.
laundromat and apartments. And after 2 years, I learned that at, in California, you are guilty until proven innocent as
Oh
a
yeah,
landlord, and I was thrown through the ringer. So I hung up my boots after that project. It worked out, but so I invest in all syndications. I mean, the stuff that my
yeah,
clients invest in, for the most part, um, I invest in. Right, this passive income. Again, I tend to be on the higher risk end of things, whereas many of my clients are not. But I'm totally passive. I'm definitely in real estate. I have very little in the stock market.
yeah.
I think I own iBit, Bitcoin, just because I don't want to miss the train, if you will. Uh, uh,
Same,
but
same.
that is it. I mean, I love just real estate, oil and gas, mineral rights, privates, passive income stuff. That's
Got
all
it.
I'm do.
I love it. Well, that's good because that's the space you're in, right? Like you get that. You get to play around with that. Well, Ben, man, thank you so much for joining us on the income flip. If somebody wants to get a hold of you, what's the best way to reach you? Obviously, we're going to put your social and all your handles down here, but just for those listening, what's the best way?
Because I'll give you my cell phone number and I will always call you back. 818-269-4972. Of course, you can go to our website, perchwealth.com, or my email, specifically bcarmona at perchwealth.com. Again, we advisors all over the country. I don't care if you have 1031 exchange questions or you're in a 1031 exchange or you have investment questions. We pride ourselves on education and insight. And so we're happy to speak to you. Thank you, Ron.
Ben,
Very much
my
appreciate it. This has
pleasure.
been
My
great.
pleasure. That's awesome, man. Thanks, brother.